So yeah, we covered a lot of kind of the outlook for this year. Again, the catalysts are going to be there's always potential black swan events, um, but incoming administration, Fed meetings, FOMC, rate cuts, sticky inflation. Um, One interesting thing that I wanted to comment on, just kind of like statistically speaking, so we had two back-to-back years of 20% plus gains in the S&P. Um, Now that's unusual. So we haven't seen that happen a whole lot. If you go back like between 95 and 98, we had four consecutive years of 20% gains in the market. That was around the dot-com bubble. So that preceded the dot-com bubble. Then we all know what happened there, right? The markets lost about 50% of their value after that. So now everyone's asking, like, are we in an AI bubble? Are we going to see something similar? Um, and I don't know, but it's a possibility. I don't think we're in the same kind of risk environment that we were back in the late 90s, early 2000s. But I'm not going to get complacent. And yeah, it's a possibility. I think probably looking at the companies that are leading the AI boom, NVIDIA, et cetera, that it seems less likely. These companies aren't going to go under. So that's why it's not the same scenario. But that doesn't mean that the AI boom couldn't become a bubble. Like we could have overestimated it. I think certainly a lot of these tech companies are overvalued. So we've had two consecutive years of 20% plus gains, and generally, I mean, the consensus says we're gonna have a kind of a muted performance in the S&Ps this year. But um, I think generally, again, the consensus is we'll have a positive year. It's just probably not going to be another 20% plus year based on the current valuations. So that's where, volatility comes in. When markets are coming off the tail end of like two, back-to-back 20% plus gains, that's going to create some volatility. All right, buyers and sellers there's going to be more of a tug of war. So I think that's what we're going to see. And but then likely by the end of 2025, S&Ps will, I think, likely close higher, just not, another 20% plus year. Because I don't think the AI, I'm not going to call it a bubble, but AI boom is perceived the way that the dot-com, what we now know to be a bubble was at that time. But looking at valuations, the, percentage levels off the 36 period monthly average, those are all looking like, we're in an area of potential mean reversion, so downside rotation and volatility. Um, and I think December kind of gave us some clues to that, right? We didn't see the Santa Claus rally. We saw the pullback. S&Ps were down about 3.5% from December highs. Obviously, a great year for the markets, but we may be starting to see some of this AI euphoria get reined in, and so the focus is going to be back on inflation, back on FOMC rate decisions, that kind of stuff. So and that's just referring to the S&Ps. The Nasdaq Nasdaq was up almost 30% in 2024. So those are huge gains that you just generally aren't going to sustain themselves for a whole lot longer. But that anomaly. So it's rare, we to see back-to-back 20% plus years on the S&P. It happens, and it's been over 2.5 decades since we've seen that. So it's kind of some unusual times in the market right now. So yeah, I think worth noting, being aware of, and position yourself when you're making trading decisions. Be ready for volatility. Don't let it scare you. and volatility creates opportunity. Just know how to navigate it. So what we saw today is not going to be unusual. Uh, we're going to see these 1% daily pullbacks. It could be the norm for a while. Um, and they could be, for who knows, tomorrow we could rally right back up to where we opened today. Uh, but this is where it becomes highly useful to watch these levels that we map out. So if we start to see those break, watch highs and lows on the daily candles. Okay. And be prepared for reversals. Tomorrow we could break today's session low and then reverse back higher. Um, but what helps navigate that are the key levels. Okay, so we know where those are. We map those out. So, if we break today's session low, and we come down into like the 58.75, 58.50 area tomorrow, maybe we'll see a reversal back to the upside off of that. So know where your support and resistance levels are. Be prepared for volatility. Kind of some of the best tips I can give.